Hello, it is June 23, 2023. It's just 7 days before the half year ends. And we will be discussing today which companies year to date have gone a very, very strong move in the US markets and which ones do we actually buy on a pullback if a pullback ever ensues. So, this is just going to be all about charts. We won't be discussing fundamentals here. So, let's just go through some of these charts just for a perusal, right? One thing that we have to take note of is that the reason why we are trying to focus on charts is that sometimes these charts know more than what we know. Okay, so wait up, let me take a look. Okay. So just to give you a handful of ideas, these are year-to-date leaders, some trading above 30%, 50%, some hitting more than 100% for the year. They're pulling back, which we think is going to be a great entry for momentum favorites. It has nothing to do with fundamentals, but momentum favorites, although some of them may actually have fundamental attributes, which you need to actually do more due diligence for. One thing that we noticed that has made this market more resilient than ever has been what most people were calling central bank liquidity. The Fed and the central banks took action to ensure dollar liquidity. Take note that as of March 2023, when the Silicon Valley Bank collapsed, there was what we call a central bank liquidity swap, wherein coordinated central bank action was done to enhance liquidity through the US dollar swap lines. This didn't happen until 2008 financial crisis, the 2020 COVID-19 market meltdown. So some of the bulls believe that the actual bottom happened around March 2023. Other bulls actually believe that it happened October 2022, which was the actual low. Either way, the point is that the central banks, US, Canada, England, Japan, Europe, Switzerland, all set joint liquidity measures to take action towards confidence building. And that in turn helped the markets go higher. So let's take a look at which stocks actually have been going higher. I made a thread here on my Twitter feed, Facelesstrader, and then we'll just go through the charts itself. Okay, so bullish year-to-date charts. Let me just try to emphasize these. Okay. So the most bullish year-to-date charts, some of them would be trading in the semiconductor industry. You've got Avgo, which is Broadcom. This one actually trades at an all-time high. Wait, let me see if it's viewable. Yeah, okay. Viewable naman, no? Okay, as you can see, we'll just focus on the charts. You can see that as of March 2023, Avgo was already trading near the highs, and with an impetus after numbers, it broke above the $640, hitting as high as 920. Now, a pullback would be more healthy to basically set up for the next move. It could consolidate towards 800. It could consolidate towards 780s. So we would view around 770 to 800 as the next opportunity entry point here, which is still gonna be around roughly 50% higher for Broadcom. So in some cases, yes, you might argue this is leaders chasing leaders, winners chasing winners. But in our view, with the market momentum still on the uptrend for Broadcom, it makes sense for us to chase with the bulls, albeit not at this level, but perhaps about 10% lower from current prices. Now let's take a look further on price action moves here. AMD, we're noticing the same drift here. AMD around March actually pulled back from 99 all the way to 84, had an earnings, and then actually discussed about those Microsoft chips being built, those AI related chips, which triggered this to go from 80 towards 130. Assuming that was, we do believe that that was an actual breakout here around 99. And so any dips on AMD back towards 99 is a reset for another move higher. So that's a bullish chart that you're seeing actually on AMD. Shopify. So Shopify actually, from a chart perspective, This has already broken above the $50, which is actually the prior resistance that has become the new support. Notice that for the last 1 year, from May 2022 until May 2023, after the earnings and after the sale of their logistics towards Flexport, the company is now in a bullish territory from 55 to 63. Current levels of 63 might actually seem a bit uptrend channel, might actually give us a leeway for entry below 60. And if you do want to do your own due diligence, just check out Shopify, as this is a consumer discretionary, highly sensitive towards the economy. But it means that the market is actually forward looking, that it would have a better time in the next 6 months or 12 months. Okay, let's take a look at further movements, just taking a look at what the charts are telling us. Marvell is actually another company that just broke out here after the earnings with a gap up. After consolidating from 35 to 50, which is a $15 range for the last around September till around June. So you're talking about roughly a year here. Sorry, September to June is roughly 9 months. So after 9 months of consolidating, you break out. And now we're actually in a new path or a new box where your resistance of 50 becomes your new support. Last price is 59. If it dips, it's going to be 50. We view actually that for these charts, dips would be on a buy on pullback territory. So the bias is controlled by the bulls for these types of charts. Gap fill would be a good entry point for Marvell. The trade desk here, this is a breakout. You could see that it broke above this 52 area after also consolidating from 40 to 52, triggered by an earnings. So initially it gapped up, then pulled back down towards 52, the breakout point, and then went back up. So far, it's retesting that resistance here at 76. Could pull back towards 64, but it looks like the next path of least resistance is to go above, retesting the last resistance of 88 and 96. So that's the Trade Desk, which is a digital programmatic advertising company. Now, Palantir is also a breakout. You'll see that since May 2022 until May 2023, the company has been in a 1-year accumulation chart from about $6 to about $11 to $12. And you're seeing actually that after that quick move, we are getting a pullback. It could actually consolidate here already at 14 or a little bit lower here at 13. Anyway, there's quite a lot of support. You're seeing that the prior resistance at 13 is now the new support here at about 1286 for another run up. So this is just all purely charts, but you can see that the breakouts here have been occurring with very, very strong volume, suggesting that the bulls are actually in control for Palantir. NCLH is also a breakout area. So you're seeing that the Norwegian Cruise Line Holdings had a strong 1 year accumulation, consolidating from 10, 11 to 15, breaking out of 15 towards 19 quickly. This could consolidate back towards 15 or 16. Wait for a better entry point for better risk reward. But it looks like this one is on the cusp of another new box breakout. So just watch for any potential pullbacks on NCLH for another continuation upwards towards maybe first resistance at 22, then next resistance at 26. So let's just keep things simple first. TQQQ. So TQQQ here, as you can see, just like the NASDAQ, it's been actually consolidating and broke out this roughly May. It broke above TQQQ's prior resistance here on $28, hitting as high as 40. So we don't know if it's going to pull back towards 28. That would be a deeper pullback. Nonetheless, this ascent towards 40, 42 initially is pretty fast, that it may necessitate some consolidation or sideways action for your QQQs. So probably pull back at about midway, here about 34 area. SMCI, a momentum pullback, momentum move. You can see that after this strong breakout on earnings this May, this went from 100 towards 300 initially, nearing 270, pulled back now towards 220, your midpoint is now actually at 200 or 192, which is also fulfilled with another gap up. So just let's take things one by one, but this is a very bullish chart. Let's see whether 192 is going to be an entry point for SMCI. NVIDIA. So you've got actually a very, very strong gap up after the numbers, after the raising of guidance to new highs. However, 440 is a Fibonacci area of resistance here, about 440, unless it wants to go hit higher. So we could actually consolidate first. Either it consolidates towards 370, but best entry would be a gap fill towards a prior high of 340 for a retest there. So we'll see if it will actually have a retracement of about 20% for NVIDIA over the next coming months. Let's take a look at Tesla. Tesla here is a breakout above that 213 level. Take note that prior, this was also 213, surging towards 400. Consolidated a long time, broke down from 200 down towards 100. So we actually had a strong mean reversion play here at 200. So any retest back towards 210 or 220, we would view that as a support. Either it range bounce from 200 to 300, or it range bounce from 200 to 400. Clearly, we see a lot of supports for Tesla here at about 220 to 210. Okay, so it's still a momentum name. Tesla's a momentum name. Meta has gone very much like a V-shaped rally here. Although an initial drop back towards 250 is not out of the cards, 246 to 250 is possible. That would be a retest of prior supports seen in 2021 here. So you might see actually a retest of support at about 250 in case a 10% or 15% pullback on Meta ensues. Why it would have a pullback would be anyone's guess, but we would assume profit taking or simply just overbought conditions after having a very strong run-up. Palo Alto Networks here, as you can see, the strong run-up from 40 to 200, consolidated, digested the gains towards here, 127, made a very strong push from 127, almost doubling here towards 250. You might see some resistance here at 250 to 260, and then a retest back towards 210, 212 for Palo Alto Networks to have another for another reset of the movement. So we'll see whether Palo Alto Networks retest 212 over the next coming days. Google has been strong in a bullish flag here at about 120s, although a very strong pullback in the markets could trigger Google for another re-entry point here back towards 110, or even here at about 115, where you've got actually a gap fill. So best entry point for Google, for those who are re-entering or just having a new entry, Google would have some entry points here at about 110. So these are all purely charts. 110 below would have a lot of buyers for Google. We've got Adobe. Adobe here as a very, very strong breakout here around 380s towards 400. So any retests back towards 400 or 420 would be seen as a really good entry pullback, just as much as the prices during 2022 areas around March to July. So around those levels, 450 to 400 or 450 to 375 is where you want to be accumulating some Adobe for the next run-up in the next coming months. Unity, obviously this had a very strong breakout. You can see that volume surge here. The best entry would be around 32 to 35 if you're going to be looking at Unity. Unity has quite a huge range in case it does break above resistances. Initial resistance here at 45, then 60, then 75. So from a risk reward standpoint, it does look like Unity has about a 100% or more move just based on the charts. So look at this name on a bottom fishing scale. We've got Copen, also a good entry point here. You're seeing a really good breakout here at $1.80, triggering a fast move towards 250, then consolidating, looking to be a symmetric bullish flag. Whether it consolidates over the next 2 months or 3 months, it looks like any retests around 170s to 180s would be a good entry point for another run-up. Whether it hits $2.50 or $3 or all the way towards these next targets of about $4.50 remains to be seen, but it looks like actually this is already finished in the bullish consolidation or setup or accumulation, whatever you want to call it. And it's actually next, whether it takes a year or so, or just 6 months, we look to see actually potential breakout moves over the next 3 to 6 months for this type of accumulation breakout. Okay, XLK, which is of course your technology sector. Your tech sector is trading near highs, if not nearing all-time highs, similar to the movement, of course, of Apple and Microsoft, as Apple and Microsoft are the biggest players when it comes to sector fund ETF, such as XLK. Now, right now, what we are seeing simply is that if 178 is pierced above, you do have some resistances at 190, 200, and 220, which suggests that, yes, you can go higher for another 10% or so, 5, 10%, or 15%. But it looks like also you're equally likely to consolidate first for a healthier run here at about 155. So we are of the view actually that the markets would need to take a breather first to go sideways, even a bullish manner, to trigger the next leg up. Okay, there's actually a lot of suggestions on why liquidity matters, but I do believe that I am not the best person to tell you anything much about liquidity. But what I would share to you in this last, in just a very short clip here, is that the markets are showing to us, the US markets are quite overbought, but it doesn't mean that it's really bearish. In some ways, it's bearish because it has gone way up. But in another, if you would also view it in another way, it's very, very bullish in the sense that in a market where you would find many, many stocks trading today at 30, 50%, 100% moves, it remains to be seen on whether this was a liquidity-led rally or it's actually set up for a really, really strong bullish market over the next couple of years. So is it another continuation? So far, the evidence of the matter in the price action tells us that liquidity has been very supportive of the markets. And so we couldn't actually be too bearish and neither could we be too bullish. So I would say that you have to keep your eyes on the price, and that means that this market can pull back, but look at pullbacks at potential entries. So we'll see if the markets do pull back, but even the bulls and the bears are all in cognizance, and all are actually seeing that the year-to-date moves necessitate quite a sideways action first before the next move up. So that's it. I don't want to take your time. Hope that you have a good weekend. See you again next week. Bye-bye.